Looks like there's some follow-on buying this morning as well. There you have it, 55 points in the green for the Nifty.
Friday was a solid session for our markets, but today things are fairly quiet at the index level.
We need to see more volume participation, but as of now, a lot of price participation. Larger stocks are seeing a lot of interest today.
It's an absolutely flat session. But sectors are doing well. Some sectors are under pressure. The sectors which are doing well are autos, PSU banks, real estate. The sectors which are under pressure are FMCG, IT, metals. We are going to end near the high point of the day after middling through most of the session.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the headlines for the day. A last-hour recovery helped the Sensex and the Nifty end in the green. Financial stocks led the rally. Mid-caps outperformed blue chips today. Crude oil spikes after a surprise decision by the OPEC Plus to cut output by 1.16 million barrels per day from May. Analysts say this move could push prices to $100 a barrel mark by year-end. The news helps oil producers ONGC and Oil India clock gains, while stocks of oil users witness some pressure. And Motown sales for March are a mixed bag. Sales of passenger vehicles marginally declined quarter-on-quarter for Maruti Suzuki. But SUV sales shine. The auto major sounds a note of caution, says there are red flags for the auto sector which could hit demand. However, commercial vehicles show strong positive demand momentum, while two-wheeler domestic sales see double-digit growth in March. And the deferral of the APM price revision pushes IGL and MGL lower. Gas Committee Chair Kirit Parekh says that he's hopeful of the Cabinet clearing most of the panel's recommendations soon. Tells CNBC-TV18 that the time frame for this remains unknown. And in stocks and news, a strong quarterly business update pushes CSB Bank higher, while a weak one hurts Karnataka Bank. Meanwhile, Time Technoplast rallies after an important regulatory nod. Well, here's the lineup of what we have in store for you in the next half an hour. In Market Opinion, we have Ed Yardeni, the president of Yardeni Research. In Corporate Voices, we have Shashank Srivastava of Maruti Suzuki and Hemant Sikka of M&M on the auto industry. Okay, it's a power-packed lineup in the next half an hour, but before all of that, let's get to the day's trading action. A last-hour recovery helped Dalal Street end at the day's highs. The Nifty and the Sensex ended 0.25% in the green. It was financials that led from the front, with the Nifty Bank gaining 0.5%. The mid-caps also outperformed the benchmark indices. BSE companies gained a market capitalization of over 1.5 lakh crore rupees. In fact, a great going because it was the second day running that the bulls were in complete control of the market. Prashant is here with the day's trading action. Prashant, over to you.
Well, decent gains for the market by close. The market started on a positive note, gave up all gains, went into the negative, stayed flat for the bulk of the session, and towards the end, in the last 30 minutes of trade, it picked up again, and we came almost close to where we started. The opening level, that is, the index was shot off that level by about 20-30 points. Banks have been the stronger part of the market, and today was no different once again. Bank Nifty ending about 0.5% higher. Now, mid-caps and small caps on Thursday and Friday last week have been doing did very well. Mid-caps were flat, but small caps continued the momentum on the upside, and that's the reason why the broader market advanced decline ratio, etc., was also pretty favorable. Let me come to sectors. Autos did quite well. I'll come to stocks there in a bit. CPSE, the government companies, packed it quite okay, and as I said, both public and private sector banks really stood out. Now, Nifty gains coming through in stocks like Hero, Coal India, Bajaj Auto, Maruti and Divi's Laboratories. Oil popped up, right? I mean, Sunday evening after that OPEC announcement this morning, we woke up to oil prices up 5%. The oil marketing companies on your screen down as a result. The broader market looking quite okay. RVNL, JBM Auto, Atul Auto, TTK Healthcare, Dhani, Gati. These were some of the volume-led gainers. There were losers as well. KPIT Tech on the back of a brokerage downgrade. SRF was lower. The Adani pack, more down than up today. Adani Green case in point. MGL, Policy Bazaar were a few names. The Nifty, after today's move and the move that we've seen last Thursday and Friday, stands exactly at the 40-day exponential moving average for the Nifty, which is the first level it needs to take out. Tomorrow is a holiday, but remember, global markets are trading, and one can only hope that after the stability that we saw last week, it continues all the way this week as well when we return to trade on Wednesday morning. Back to you.
All right, thanks a lot, Prashant, for that. Well, in Market Opinion, Ed Yardeni of Yardeni Research says another Fed Reserve rate hike could hurt banks further. Meanwhile, Nilesh Shah of Kotak Mahindra Asset Management says the upcoming macro events could cause volatility in the market. Listen in.
Once again, the Federal Reserve is turning out to be the key player here that affects everybody else playing the game. The Fed is likely to perhaps go up by another quarter point. I think they should be done, actually, because I think we are continuing to see inflation moderate. And meanwhile, the inverted yield curve has been predicting since last summer that if the Fed continues to tighten, something might break in the financial system. And sure enough, we have a banking crisis. I don't think it's anywhere near the banking crisis we had in 2008. The provision of liquidity to the banking system has been quite substantial just in the past 2 weeks. And that means that their total assets have actually increased.
Next year also, we will see a lot of volatility based on events. If those events turn out to be in favor of India, then certainly markets can deliver positive return, because since almost August 21, markets haven't given any return. But if those events go against India, then markets may deliver negative return. We remain positive on the auto space, mainly first the passenger vehicle, then the commercial vehicle, and then the two-wheeler. In passenger vehicle, clearly there is a K-shaped recovery. There is more buying at the mid to higher end than at the lower end. There is a waiting period. Commodity prices have cooled off, and that has not been passed on to the consumer. So margins will be positively impacted.
All right, on to the second headline now. Crude oil prices spiked after a surprise decision by the OPEC Plus to cut the output by 1.16 million barrels per day from May. Analysts have said that this move could push prices to $100 a barrel mark by the end of the year. The news helped oil producers clock gains while stocks of oil users witnessed some pressure. Manisha Gupta is here with the details. Manisha, over to you.
Well, thank you for that. Yes, that's right. The oil prices did surge after the OPEC and allies announced surprise production cuts. Let's take a look at how the prices have fared in the month of March. Oil prices actually fell 5% in March, hit a 15-month lows of $70 a barrel, and the fall in crude prices could have been the reason that prompted the OPEC and allies to cut production. Well, the group trimmed production by 1.16 million barrels a day. The Saudi Arabia is calling this a move to precautionary measure in a bid to support oil market stability. The cuts, which will start in the month of May this year, will continue till the end of 2023. Russia and Saudi Arabia will cut production by nearly 500,000 barrels per day, while UAE, Kuwait and Iraq will cut production by anywhere between 200,000 to 100,000 or even lower for some of those countries. The OPEC's volume cuts now, with all of this, stands at 3.6 million barrels per day, which accounts for 3.7% of the global demand. The OPEC has cited an export halt from Turkey, the rebound in Chinese demand, the slowing U.S. inflation and the high U.S. crude production in the month of March as a reason for the volatility in crude oil prices. So the big question is on where are the crude oil prices headed by the end of this year. We have Goldman Sachs report coming over the weekend which says that the prices are headed to $100 a barrel. A similar report from JP Morgan also says that $96 a barrel is where they are expecting the crude oil prices to end this year at. CMC Markets and Energy Aspects see the crude oil prices going to $100 a barrel as well. And then you have ING quoting prices at 90, Vanda Insights at 80, 85, and Refinitiv talking about $80 a barrel as well is where the crude prices could be before we end this year.
I'm not substantially revising my expectations for this year. As I've been saying, last year, Brent averaged around $100 a barrel. For this year in 2023, I'm expecting it to be $15 to $20 lower year on year on average.
We're looking at this point in time in the short term up to between $85 and $87, but perhaps longer term, we could see the oil prices actually weaken, and we wouldn't be too surprised if we saw it between $70 and $80.
All right, that was the big headline, actually, the move on crude. But the third headline today is what happened with the auto sales for March. They were a mixed bag. Sales of passenger vehicles marginally declined quarter on quarter, but Maruti Suzuki saw its SUV sales rise. Meanwhile, commercial vehicles showed a strong positive demand momentum as well. So let's quickly take you through some of the big auto trends that we noticed in this month of March. To start off, we had commercial vehicle sales, which were pretty strong this time around. So whether it was Ashok Leyland or even Eicher Motors commercial vehicles, good double-digit growth is what we saw this time around. There was a growth of 19% that Ashok Leyland clocked in, while a growth of 35% that Eicher Motors saw. The underperformer was Tata Motors. So you had Tata Motors CV sales, which were absolutely flat. But the management is quite optimistic. The management, Girish Wagh, who's the executive director of Tata Motors, said that the demand for heavy trucks is quite robust, and there's increased activity in e-commerce, construction and mining. There's higher replacement demand as well, advanced buying in anticipation of price hikes that have led to a strong growth in commercial vehicles. Apart from that, the second trend that I noticed was that two-wheeler sales have seen a good improvement as far as domestic sales are concerned. So Hero Motors saw sales growth of 15%, TVS Motors saw good growth of 22%. Channel checks indicate that Honda in the month of March faced a supply constraint, and hence Honda's loss was TVS Motor and Hero's gain. So hence you saw that up move over there. By the way, TVS electric scooter iQube also saw very good run rates. So 15,000 units sold in the month of March, second consecutive month of strong growth. And Royal Enfield also registered its highest ever sales in the year FY23. The other big trend I noticed was that SUV sales were very strong this time around. M&M reported record high SUV sales in the month of March with a growth of 31%. And Maruti says that their SUV market share is picking up. It's currently at 11% and they hope that it would reach 25%. They've guided for it to reach 25% by the end of FY24. And finally, talking about Maruti, the one thing that stood out for me in the interaction we had is that there are red flags in the auto industry. So that's what Maruti said. They're quite cautious. They said that these red flags could dampen the market sentiment further. So let's listen in to what the management told us earlier.
I think the growth of 20% plus in next year may not be likely. It's unlikely that we're going to see this type of growth. There are some looming red flags which we are now increasingly monitoring because we believe they could have a negative impact on the overall demand next year. That includes first and foremost the overall economy growth itself. The auto industry growth is very, very highly correlated with the per capita GDP growth. Our exports for Latin America, Middle East and Africa have been steady and strong. And immediately next year, we do see an improvement in our market share thanks to the SUV vehicles that we have introduced and the sales of which both the Fronx and the Jimny will start in April end. The combined effect of that should increase our SUV market share. Last year, our SUV market share was just about 11.5%. But in the Q4 of this year, when we have seen the good availability of Brezza and the Vitara, it's already about 18%. And going forward next year, I think we can go up to 25%.
We have been able to clock almost 33,600 units, which is a growth of 20%. The industry has been only clocking a growth of only 12%. So overall, I think it has been very, very good for us. FY23, as you know, has been very, very strong for the industry. When I spoke to you a few months back, we were talking about a growth of about 5 to 6%. Then we upped the guidance to about 7 to 8%. Finally, the industry has been very strong, clocking all-time high growth of 9,45,000 units, which is a growth of 12%. Very happy to share with you that the Mahindra growth has been 16% over this. So we have got some valuable share point gain. Our market share is upwards of 41%, and we have gained 1.2% market share in the whole of FY23.
Okay, let's slip into a quick break, but don't go anywhere. We'll be back in a jiffy with some of the other top headlines of the day. Stay tuned.